Hey everyone, Charting Man Dan of the Chart Guys. This is a follow-up video to a video I did exactly 3 weeks ago looking at long-term pattern setups on Cost, F, BABA, NEE, and CCJ. We're going to check in on how those patterns are developing at this point, and all of them are still in play because we were heading towards support 3 weeks ago, a lot of weakness, and we have held support on all of these names, and we're continuing to tighten up. So we know that there's going to be volatility when these patterns break. There's also opportunity within these patterns as they continue to develop. And we can see SPY over the last 3 weeks has gone up. So we started, this is where the video was made when we were weak, and we've now got a solid move up. So we'll see how that shapes up all these other patterns. But as far as SPY is concerned, the 4-month time frame, there's only 3 ways that this is going to play out from here. Bull flag into new all-time high, lower high and choppy sideways range, tightening, which would be, a very boring second half of 2023 as we wait for the tightening range to break, or a lower high compared to the all-time high, and then a new fear low. And that would be a very notable event if that were to happen. I think, in my opinion, it would require a significant new narrative to drive that fear to hit fresh lows, which is always possible. But we haven't really seen a confirmed 4-month downtrend on the S&P 500 in decades. And so that, for me, would be, this is now a notable bear market, and it can last a bunch of years if that were to happen. So which do I think is most likely? I honestly am detaching myself from any bias because that's what I've done all year, and I've had a good trading year. And so I'm going to continue to do that and just take it one day at a time and be very open to any of those 3 scenarios taking shape and playing out. So cost, the 2-week time frame is what we were watching, and this pattern has been forming for over a year at this point. All-time high, low of the dump, lower high, higher low, lower high, double bottom, lower high, and we now have another higher low has formed since the last video. We were heading down towards 447 support, and we saw a nice bounce. So viewing this as an equilibrium, which again, we're going to be looking for this to break sometime within the next couple of months because there's only so many candles that can fit within this pattern now, each candle being 2 weeks of time. We did have a bearish gap down open on Friday, and that was due to sales declining in stores, same store sales declining for the first time in 3 years, I think it was. So that is having us look towards support, because if we were to drop down and break 465.33, that would be a bear break of this pattern. And so for me, the resistance is still 530 as the most important level. So we can just see we're about $44 away from resistance, and we are about $20 away from support. So keeping a close eye on things, and be aware that any individual name, the direction in how we break these tightening ranges, you want to see it aligning with what the broader market is doing. If Costco breaks bear and the S&P 500 keeps heading higher, then Costco obviously has relative weakness, but we're not going to be anticipating the kind of follow through that we would expect if the S&P 500 showed weakness when one of these patterns breaks bearish as well. So just ensure that, for me, the way that I would play that, if the broader market is going in the same direction, I let it play out longer. And if it's not going in the same direction, I'm a little bit quicker to start taking some partial profit if I am playing that break. So we'll be keeping an eye on cost, but continuing to tighten up for now. F. So F was one that has another tightening range, 2-week time frame. And we did already have a bear break with 0 follow through here. It was a bear break by 1%. But for me, I'm just assuming that's a double bottom. I'm just viewing it that way. For simplicity, we have the double top. Higher low is now set. Again, last video, we were heading down towards support. And how is that higher low set? It was set with a daily trend change confirming and a bit of follow through. So you always want to zoom in and look for the details of the trend change on the shorter term time frame to indicate the levels on the longer term time frame. And in this instance, it was the daily trend change marking the 2-week higher low. And so now the levels that I care about, 11.12 support, we're $1.21 above that support, and resistance is still 13.73. And we are currently 140 below that resistance. So we're fairly close to the middle of this range. And keep in mind, we can keep tightening for another couple months. We can grind up but fail 1373, then pull back for a candle or two, and next thing you know, we're then in to May and looking for a break at that point. So tightening up still on F. If we go bigger picture, you can just see the monthly time frame. Essentially the all-time high, low of the dump, and now we're just tightening up month after month after month. And you can see, look at the amount of volatility. Big volatility, big opportunity, still some volatility and opportunity, and now just less and less and less. And wait for that tightening rubber band to snap, and you're going to see some of the bigger monthly candles that we've seen in over a year when that happens. BABA. So BABA, we were looking for the monthly inverse head and shoulders. And again, 3 weeks ago, we were at the lows. And a very significant shift has taken place since then. We had the start of a bounce. I personally missed this trade. I was looking for the higher low right here. And we were on the verge of starting this daily consolidation, and I was going to make an entry and put my stop under 79.48. And then we had news and a big gap up open, and it ran away without me. And then again, I missed an entry on Friday where I was focused on day trading AI. And this is, it's difficult for me to look at a bunch of different names to scout entries at the same time. That's why setting alerts can be useful. But it's also the kind of thing, if I had made my entry on BABA where I wanted to, with this inside bar bull break at 145 cents, I'd be up 2% right now. But with the position sizing for a swing trade, it wouldn't be comparable to the gains that I made on Friday day trading AI. So that's my justification. But what I would have done in an ideal world is enter bullish on the break of 145, and my stop then goes at 97, under 97 psychological. And so my risk is then $3.50, and the reward would be a bull break of 105 and continuation, and eventually a bull break of this monthly inverse head and shoulders, which is what we were looking for. We were looking for a monthly higher low and the right shoulder to try and form. And the bulls need to break 121.30 to confirm the first monthly uptrend since all-time highs. We've been in a 2-year bear market for BABA, and we pulled back from the all-time high a lot. 82%. This looks like a Bitcoin chart, but we know that Bitcoin has had plenty of pullbacks of 80% plus, and then we bottom out and we reverse, and there's significant gains to be had on that reversal. So this is a long-term reversal trying to take place, and it may be up to earnings in a couple months to dictate, when is that? Early May, so about a month, 5 weeks, to dictate whether we break or not. Another possible scenario, zooming in on the weekly chart, if we fail 121.30, and then we look for a pullback for a weekly higher low, and we can essentially have a tightening weekly range within that potential monthly inverse head and shoulders pattern. And if that were to happen, I'd be scouting a weekly higher low entry, because the size of this bounce retracement at this point being over 50% or right around 50, 60%, the most likely scenario next consolidation is a weekly higher low. NEE, another beauty. All these names just beautifully responding towards their supports. We had an uptrend support line we were watching. And again, we were talking about how you can have a nice visual guide, but I care more about price levels, but trend lines are visual guides. And so we were at that point in time, right down testing $69 support. We held it by less than 1% and have now bounced significantly off of it. So monthly time frame here, again, just another one that is tightening up. I'm viewing this as low, high, higher, low, lower, high. We now have our monthly higher low set. Anything under 88.04 is just a lower high. And we can remain in this pattern for another 4 or 5 months easy. Let's say we bounce for another month or two, pull back for a couple months, still within that range. So we can also gauge which of these names are going to break first. The shorter term time frame, the pattern, the sooner it's going to break. So the 2-week patterns are likely going to break before the monthly patterns. But a really nice one for NEE, and anything under 88.04 is just a monthly lower high. CCJ, same thing on the monthly. CCJ does not have a higher low set yet. So it's one of the few names that we've looked at that has not set the bullish higher low. So same thing, monthly equilibrium tightening up. We're trying for the monthly higher low, anything over 20.94. We had a nice lower wick last month, but we're seeing a little bit of weakness here this past week. So what we would need to see would be more follow through. So currently a monthly inside bar, a lot of time left to go here, but we need a more convincing monthly higher low, and again another pattern that can tighten up easily for another 3+ months. But the bulls still have proving to do here, whereas in every other name we just looked at, the bulls have proved that they held support, and now we're going to be watching for the lower highs. So at this point in time, we've already seen, aside from CCJ, we've already seen the bull entry opportunity off of these longer term patterns, higher lows. The next thing to do is to be scouting bearish entries on the lower highs or waiting for the break. So on a name like, NEE, I can be scouting a monthly lower high, anything under 88.04. And we can go 10% higher and still be under that resistance. So that's two ways to play it. We're now looking bearish on the names that have already set the higher lows to look for lower highs, because the risk to reward, if I think this pattern is going to break bear, and I look for that monthly lower high, the risk reward is going to be much more favorable versus if we do keep tightening up, but I just patiently wait and then we eventually break bear. So all depends on the individual trader. I'm personally going to likely be waiting for all of these ranges to break before I'm looking to act on them. But we'll see. Taking it one day at a time as always. But nice to see these continuing to tighten up very clearly. And we know, again, there's going to be opportunity within these patterns, but the real opportunity is going to come when these tightening patterns break. Let me know what you think or what you're watching or anything else that's similar. I'm always down if you can show me long-term tightening equilibriums that have this kind of clarity. Definitely names that you want to have on your watch list. Appreciate you watching, and we'll see you soon with another update in a couple of weeks.